Hi, Attorney Andrew Bethel. It seems as if half the videos on our channel center around navigating the tax code, and today's video is no different. This is actually an update to a video we did earlier this year on the estate and gift tax levels for 2022. Well, now we have 23's numbers, and they've only gone up again in our favor, so with that, let's jump into it. But first, be sure to like the video, subscribe, and ring the bell to stay up to date. Also, leave a comment below if you have any questions or have a topic you wish for us to cover. But as always, thank you very much for watching. As mentioned, we're talking about two types of taxes today, estate and gift taxes. I've talked a bunch about these in various videos and in various contexts, so I'll be brief. Let's start with the most straightforward tax that most of us have to deal with at some point, the gift tax. The gift tax is simply a tax on the value of a gift given from one person to another. It's the giver who pays the taxes, not the recipient, because the government wants to make it a little harder to simply give away all your money so they can get you with the estate tax, which we'll cover in a moment. However, there is a gift tax exclusion limit, meaning the gift tax itself does not kick in until you give away a certain amount to a certain person within a year. In 2022, that number was $16,000. But for the next year, 23, it has been raised to $17,000. For an example as to how this plays out, I can give my son $17,000 in 2023 and no gift tax will be owed. Additionally, remember as the tax is levied per giver or donee, it only kicks in if I give more than $17,000 to a single person. Thus, I can give my son $17,000, my wife can give him $17,000, and each of us can give $17,000 to each of our siblings, and the IRS, ostensibly, doesn't care. No taxes are due. The same holds true for your state tax board unless you live in Connecticut or Minnesota. For some reason, only those two states have state gift taxes. For completeness sake, if I were to give my son $18,000 in 2023, then I would have to pay a gift tax, 40%, on the amount over the exclusion, $1,000, meaning I would then owe Uncle Sam another $400. Well, at least my son would have a nice gift at that point. Now leading into the estate tax, there is a lifetime gift tax exclusion that I could apply that extra $1,000 towards and thus not have to pay a tax. It just so happens that the lifetime gift tax exclusion limit is equal to the federal estate tax exclusion limit, which in 2023 has been raised from $12.06 million to $12.92 million. Almost a lucky 13 million even, but alas, when the government was calculating what the increase should be, inflation was only at 7.13%. So any money I give over the yearly gift tax exemption level, I can apply towards my lifetime gift tax exemption and still likely not pay a tax. Your yearly exemption amount resets each year, while your lifetime exemption amount, well, is what it is. It doesn't reset. If you go over your lifetime gift tax exemption, then you as the giver will owe a tax of 40% of that overage, and the IRS will know because if you're applying assets to a gift tax exclusion, then you must file a gift tax return even if you don't owe taxes on it. And as a side note, if the lifetime gift tax exemption level were to ever reset to a lower number than what you already gave away during your life, then that's fine, you won't owe any taxes. But you won't be able to give away any more and escape a tax unless or until the exemption again increases. However, it takes an act of Congress and the president to do so, so don't hold your breath. On another note, the estate tax is sometimes called the death tax. It is a tax on the value of your estate after death over the exclusion limit. The amount varies based on how much is subject to the tax, with the flat amount owed plus a percentage. But a good rule of thumb is that if the taxable amount is between $1 and $1 million, then the rate is anywhere between 18 and 40%. Of course, it's a higher rate, the more money is subject to the tax, and anything above $1 million, just think 40%. Now there are ways to navigate around the estate tax as well as other estate planning related taxes, but that's something we'll actually be covering very shortly, so be sure to be subscribed and ring the bell to be notified when that video comes out in just a couple weeks. Or you can subscribe to our newsletter by clicking the link in the description below. A quick word of caution, the gift and estate tax levels are only where they are now due to the 2017 Tax Cuts and Jobs Act, the Trump tax cuts. However, that act is set to sunset in 2025. That means if Congress and the president, whoever they may be, do not pass legislation in 2025 addressing the estate and gift tax levels, then they revert to the levels set out in the 2012 American Taxpayer Relief Act passed during the Obama administration. The gift tax exemption was $13,000 per year, and the estate tax was $5 million indexed to inflation. The current estimates are that if the current levels do sunset, they revert to the estate tax and will be in the mid to high $6 million range. Still high, but significantly less than what we have to work with now. To close out, I just wanted to mention a possible use case for taking the time to navigate these taxes. Yes, a hair shy of $13 million is a lot of money. Even $17,000 can be a lot if we aren't talking about a house or a car, things we probably aren't gifting away all too often. However, do you know what else is expensive? Long-term care, whether it be assisted living, skilled nursing, or in-home support services. We're talking $9,000, $10,000 per month out of pocket. What if there's a way to receive assistance to pay for those costs, not have to spend down your estate so it can be sheltered, and avoid the state coming in to collect for what they paid for your care? Well, that's exactly what we do for our clients when we help them qualify for Medi-Cal here in California. Our last 2 videos by Attorney Dale Bethel have been on what you need to know before qualifying for Medi-Cal, and our next 2 will be on how to actually qualify and do everything I just mentioned. As a preview, we do that by utilizing your lifetime gift tax exemption, equal to the federal estate tax exemption level. As those numbers go up, it makes it that much easier to qualify and save your estate. However, you'll have to be subscribed to get all the details on that process, so stay tuned. Thank you for watching. If you enjoyed the video, be sure to check out some of our other excellent videos here, but don't forget, hit the like button, subscribe, ring the bell, and tell us what you'd like for us to cover down in the comments below.